Okay, let's take a look at this, make sure we know what we're talking about. This is the Swarthmore Clothing Company, as opposed to Swarthmore. Grants its customers 30 days credit. Therefore, that means that's what they consider to be current. The company uses the allowance method. Okay, good. That means they comply with GAAP. During the year, a monthly bad debt accrual is made by multiplying 2 times the credit sales for the month. Okay, at the fiscal year end, an aging accounts receivable is prepared and the allowance is adjusted. At the end of 2012, receivables were $614,000 and the allowance account had a balance of $78,000. Accounts receivable activity for 2013 was as follows. Now remember, they adjust their books monthly, so this is a monthly sales number. So we have to come up with that 2% of that. So 2% of the 2,820,000. $2,000,000. Let me see if I can get the number right. 2,820,000. 1, 2, 3 times 0.02. 56,400. So their first event, their journal entry for December of that year is 56,400. Okay, we got that piece. Now that's just the monthly one. Now this is year end. So year end, we have to do our aging schedule. And this is our aging schedule. They tell us this is the amount. Someone went through and looked at all the accounts, and someone estimated what percentage of those were going to remain uncollected. So we're just going to go through and do this multiplication. So 5% of the 0 to 60 group, that's 23,500. And then 11% of 82,000 is 9,020. And 28% of 69,000 is 19,320. And 36% of 71,000 is 25,560. So based on our aging schedule, when we add this up, that totals 77,400. So that's where we want to end up. That's what we want the balance in the allowance for doubtful accounts to be at the end when we're all done, okay? So now let's go through and take a look what else we have to do. We did the bad debt accrual. Now let's take a look at the write-offs. So the allowance for collectible accounts, we debit that for $59,000 and we credit accounts receivable for $59,000. And now it says what is the final adjustment to our allowance for doubtful accounts. Well, we have to sit down and figure that out a bit. Okay? Our beginning balance in the allowance account was $78,000, credit balance. Allowance for doubtful accounts, credit balance $78,000. That's what we started with. Then we added 56,400. Then we wrote off 59. Okay, and at that point, add those, subtract that, you come up with a credit balance at this point of $75,400. Our aging schedule says we want to have 77, so we need a year-end adjustment of $2,000. Okay, so that's the next piece we need. So our year-end adjustment is bad debt expense, $2,000. Allowance for uncollectibles, $2,000. Now, it asks us what was the total bad debt for the year. Okay. The total bad debt for the year basically was the monthly accruals, $56,400. And at the end, we had to add $2,000 because that wasn't enough. So that was the monthly piece. That's what we had to add at the end. So our bad debt for the year had to be $58,400. And then it says, how would the accounts receivable show on the balance sheet? Well, there's two ways you could show that, okay? You could simply say accounts receivable net like they did of $614,600. Or you could show accounts receivable minus the allowance for doubtful accounts, and then accounts receivable net. And either case would be fine, okay? You could do it either way. This would be what, 692 minus the allowance for doubtful accounts, and if you remember, the ending balance was $77,400. Either case, you come up with the same. Either method is acceptable. This is a little bit more old school. Both are legal and acceptable.